So we have now our last session before the coffee break. I would like to welcome the ABBL with their panel discussion titled The Age of Reason, Banks as Enablers of the Transition. So I'm pleased to leave the floor to Julien Fromouf, Sustainable Finance Advisor at ABBL, that will quickly introduce his panelists.
Good afternoon, everyone. So welcome my three amazing panelists to talk about the role of banks as enablers of the transition. Thank you very much. So I will start to introduce Alexandra Merlino. She's the head of regulatory affairs at Pictet since 2016, 7 years now. She has like an extensive experience with European financial regulation at an international level as well, from her previous experience at EMF and World Bank, as well as in London. She's also chair of the Financial Markets and Intermediation Committee of the ABBL and co-chairing the working group on outsourcing of ALFI. Thank you for being there, Alexandra. We have Jackie Naliu as well. She's the head of sustainable finance at ACBC since 2022, and she was also the well-recognized expert for Asian markets at the Luxembourg Stock Exchange before, and I had the pleasure to work with her on sustainable finance. So we made our first experience in that area together. And then finally, we have Marco Rasche. He's the General Secretary of Spurkes, member of the extended management of the bank as well. And he's coordinating basically with the head of sustainability, the broad ESG action plan of the bank. And of course, they will be able to share, hopefully, practical insights about how they're implementing their own action plan with regards to transition. Maybe a few words about the ABBL role in sustainable finance. So we have our role basically is to promote the sustainable development of regulated, innovative and responsible banking services, and more specifically in the area of sustainable finance, we have created a dedicated sustainability committee, including several working groups, especially one on taxonomy, where we will discuss transition, composed of experts, and since 3 years, sustainability is clearly one of our key priorities. And given the I would say complex and chaotic period we are all living in, we know that the magnitude of the specific challenge of transition will require huge investments, especially from the private sector. And together today, the idea of today's discussions will be to see the role of banks as enablers of transition. What are the main, I would say, challenges of the transition, and maybe how far we are from reaching the age of reason in the area of sustainable finance. So I will start probably with you, Alexandra. We know that existing regulation, especially on taxonomy, are kind of or tend to draw strong boundaries between, I would say, what could qualify as green or non-green, which seems to give like a binary vision of a company or basically of an economic activity, i.e. Either you're green or you're not. And on the other hand, we know that there is like a lot of people that argue that we have like 50 shades of green, and all companies have not the same level of maturity, and then those companies would require, I would say, important in financing to shift to a more sustainable business model. So my question would be, how within your bank or personally would you place the cursor?
Thank you, Julien. Good afternoon, everyone. Yeah, I think in terms of regulatory requirements, I want to sound optimistic. I think we are reaching the age of reason at last, or at least being on the fringes of the age of reason. We started out this regulatory journey here in Europe with the EU Action Plan, which I'm sure was mentioned earlier. And all of a sudden, this sustainable finance ESG world was extremely binary, as you put it out. So you either in or out, good or bad, green or brown. Even the EBA, the European Banking Authority, thought about introducing capital requirement for investments and labeled investments, some of them brown as opposed to green. And then all of a sudden, there was this flight to making the right choice and coming up with the right data or the right rating, etc. I think we're past this phase. To some of us in the reg space, now it may feel that we are kind of going a bit schizophrenic in the sense that now we're pedaling back on a lot of these very extreme, quote, extreme ways to categorize things. For example, the ABA, to quote it, has just realized that the brown factor is not a good idea, and in fact, it's just a bad way to make an issue even more complex than it should be. And disclosure regime is currently being revised. As we all know, the SFDR is up for consultation just 2.5 years after being introduced. And also, the concept of transition finance has become more prevalent, I would think, than just being simply ESG compliant, because at the end of the day, it is about financing how we move into a new world. So ESG, sustainable finance, is no longer an exact science, quote unquote again, but it's, as many of us have said in multiple presentations, a journey, of course, but really a way to project ourselves as financiers of the real sector and of the sector in general, to live and work in a different environment where binary notions or too clear-cut ways to categorize things do not fit the actual reality, whether it's an investment reality, a transition plan reality, an entity-level disclosure reality. Even earlier, picking up on one of the other presentations, even the data providers have finally come to the conclusion that they don't have the right data quote. Sustainalytics or other MSCI are possibly no longer the solution, thank God. They never really were, anyway. So there are different ways to do these things. I mean, in some businesses, even in some banks, we are thinking about having our own analysis and sort of reinforce some of that effort. So yeah, I think we're getting close to the age of reason, thank God again. And I think also we're moving on into a more, pragmatic and smart way to do certain things, especially in the regulatory space.
Thank you, Alexandra. And talking about the ESG data challenge, we also hear very recently that might be a further delay on CSRD. We know that there is also political coalition against the delivery of this very important directive, which would feed financial market participants with the required ESG data. So that will be even increase the problematic of or the issue of transition finance to a certain extent, because there will be plenty of information with regards to transition. So thank you for sharing that first view. Let me turn to Jackie now. Jackie, to price the environmental and social factors into your bank lending process, what measures does your bank have in place to mitigate or minimize any potential negative social or environmental efforts to its transition finance initiative?
Well, first of all, I will anchor my predecessor speaker about this view of current world. We are transit from the binary, right, view. We are coming from more a global, holistic view. For us, as a bank, as a Chinese bank, well, the journey, I would say we are just started our journey of this ES transition, and it's not easy. There is a lot of qualitative and quantitative issues outstanding. But as a bank, I think all the audience, we have to have the figures to convince the management, the board, to have the drivers. So that's basically our starting point. We are starting to calculate the finance emission. with our existing client by data collections. And then we come to a more problem than answers. How to balance ourselves. We have coal mining companies. What are we going to do? Are we going to stop all the loan from them and they have like 10,000 employees in somewhere in Poland? They were out of job. They were not out of job because our only bank, but together as all the syndicate bank together, nobody will finance them there. Is that a solution to create a social issue? We don't know. We don't have all the answers. And then we rethink on our strategy. What exactly do we want to achieve? I think in the end, our management and our board was agree the bank want to adopt a just transition. We try our best effort, of course, not to leave any of our clients behind. This is meaning we are building a kind of ESG risk model, try to captivate the price for environmental and social factors into our existing banking model. It's not a very simple journey, and I think we have a lot of questions and solutions from the time beings. But just to summarize, what the main takeaways from our bank, we have to have the data. I mean, you like it, you don't like, you have to work with some maybe database provider, maybe some NGOs, but you have to have this kind of space, comprehensive enough, convincing enough for your shareholder, but of course, most importantly, for the stakeholder as well. Thank you.
Thank you, Jackie. I like the picture that I have in mind, that meaning that this finance, I would say, opportunities would be like a huge cake, and then you have like the green piece of the cake, which is like very small, and that would be like what we could qualify as green or sustainable, and then you have all these missing, incomplete pieces of the cake, which are all those companies in transition, and then you are like still like struggling to find the data and find the right way to engage with those clients to finance the transition. This is where we have all those, I would say, greenwashing problems or issues, because there is like different cursors where you would place or consider transition finance. Because from the bank's perspective, you might consider that you are financing this transition plan of the company, and on the other hand, you might have like also civil society or other investors that would consider that you are just financing like non-green companies, full stop. But yeah, that's very complex, and here we have like a bank which does strongly support the local economy. I know that there is like an ongoing plan to have like specific measures to support the transition of Luxembourg economy. So what is driving the transformation across your organization towards more sustainability, and does basically your bank has specific sustainability targets in that space?
Well, when coming to what are the drivers of the transformation of the transition strategy which we are currently implementing, then you have three topics. It's regulations, like my colleagues have said, which were putting pressure over the last years. Then you have the voluntary engagements from Spurkis. So we signed the UNEP 5 principles back in 2019, I think it was, or the NZBA principles, where we have to set specific targets, which I will come to later. And the third one is, of course, the regulation engagement and the support of the local economy. Sorry. When you look at our statutory mission as a Spurkis, we have always been prone to support the development of the economy, which means also that we have to look into what are the risks which are coming in the future for our clients. So that would basically be ESG risks. The challenge and the secrecy to this will always be to engage as well the employees as the clients, meaning when we put transition and ESG into the heart of our 2025 strategy, there you have to put your efforts on the education of the people, meaning of our employees, because these are new risks which they were not confronted with back in over the last decades. They are confronted with new data, new challenges for the clients. They have to explain to the clients what they will be confronted with in the future. So, meaning that even though the support of the local economy drove us to developing more products and services already back in the past with the specific green component, we will have to put even though more pressure and more efforts into this in order to convince clients as well to change their business models into a more green, let's say, direction. Concretely, we have, for example, put in place an exclusion policy, sectoral exclusion policy, where a certain type of clients will not be eligible anymore. But even though they would be excluded as a kind of client because of their business model, if we see that their project is going into the right direction, saying, well, they are developing a project which is helping the transition, then of course they will be eligible for financing. And that is not always as easy as it should be to convince our employees. The second challenge which we have to face is, even though not forgetting the clients, we have to put ESG risks into the heart of all of our processes, from the front to the back end. So the front end, which I spoke about, we are coming to the back end. So ESG risks have been put into our approval process for the approval of new products. So each time there's a new process or a new product, my team will be asked, is there specific ESG risks? Or looking more when developing a new product, even though, and process. Also, we have created and set up a talent management team, which are currently looking into how to convince our retail clients to move into that direction, saying, well, you have to renovate your building because and this is also for the, let's say, to the advantage of the bank, because if we have green assets, our green asset ratio will improve. This will also have an impact on our reputation. I'm looking at the clocks going quicker. Yes, we put in place specific NZBA targets. When you look at, we have published also the NZBA report. So together with the scientific advisory board, which we launched a few years ago, where you have scientists sitting in, we consulted them to say, well, what are the correct targets in order to have a decrease of the carbon emissions of our own portfolio? As you know, we have participations in a whole bunch of subsidiaries, local subsidiaries, in the air freight sector, for example. There we went to seeing, well, their CFO and their specialists, together with the scientists, saying, on the basis of the TPI, how are you decreasing your carbon emission? Meaning we are taking into account the sustainable air fuel, they are renovating their new fleet, etc. So we put some targets on mortgage, airline, and energy, and the other one was, which from the top of my head, I can't remember. Excuse me? Transport, yeah, mobility. Yeah, true, thank you. Well, and like my colleague said, the challenge will always be data. Speaking about our business, for example, when you take the mortgage loans, which are directly included into the green asset ratio, you can only include your mortgages into the green asset ratio if you have the right quality of data. Meaning the right quality of data would be to have the EPC, the Energy Performance Certificate. But the Energy Performance Certificate over the last decade was not an obligatory document. So we do not have the necessary data, which means that it's binary. Do we have the data? No, you can't include it into the green asset ratio. But when coming to the publication of the green asset ratio next year, this means that you will have a green asset ratio which might be lower than your right level of green asset. And that's the whole challenge to get to improve the stock, let's say, of mortgage loans.
Thank you very much, Marco. I'm just thinking about maybe having a kind of voluntary transition ratio that we could maybe at least disclose to a certain extent. Yeah.
As a bank, we have the advantage that we can publish the beta, the banking trading book asset ratio, but there we can include on the basis of approximation the right green asset ratio. Let's say that way.
Thank you very much. I don't know. whether you're like familiar with all those ratios, but basically, no, that's fine. But basically, yeah, it seems that according to several surveys, and especially the ones from the ECB, that the green ratios of banks are clearly very limited, also due to the fact that we have like very limited exposures to companies that could really qualify as green according to the EU taxonomy. So that's very, very difficult. But again, talking about the transition, usually what I'm hearing is really I would say exchanges about the way banks are considering transition from a risk perspective. You know, how companies have to adapt to regulatory changes, political changes, or technological changes as well. But do you see, I would say, real or concrete business opportunities for stemming from this transition as well? I don't know who would like to start.
Well, you know, it's about squaring the circle of the regulatory and the political requirements, and then the business opportunities. But then, to go back to your question, is there an opportunity in the transition plan? What the transition plan does to you as a bank is it forces you to stick to certain kind of commitments. So the regulatory requirements, the ratios, obviously these are day-to-day worries for banks these days, sadly. And unfortunately, you sort of lose track of the actual transition finance you want to do, the actual ESG investment you want to get involved in, because you're too hung up on those regulatory requirements, which might end up being a bit empty, to be honest. So having a transition plan can be seen or considered as an opportunity, because it reminds you that you have committed to certain investments, to certain business opportunities that have to fit into the transition view. And you have to try to strive for those commitments with or in spite of the regulatory requirements that apply to you. So in that sense, your transition plan is, so to speak, is your best tool, your best advisor in a certain kind of way.
I even think that the regulation is achieving the initial goal which the regulators had, because if you look at let's say, for example, non-financial reporting, which is only applicable to a certain extent to the big companies, in a nutshell. Even though the small companies are not entering into the scope of the CSRD, what is happening when having a public tender, being it in a public authority or a big company, let's say in a listed one, they will always have in their tender, do you comply with ESG, blah, blah, blah. And the small companies which will want to have commercial opportunities, they will have to comply with it. What are we doing? Okay, I was complaining a little bit, but we are confronted with regulations. But on the other hand, we also see opportunities in commercial terms, because what we will be doing, we will be trying to convince even small entities, so the SMEs, to prepare for the non-financial reporting, because together with one of our partners, where we are implementing a tool, because once they have their reporting, once they have their taxonomic scoring, it will be easier for them to participate to public tenders, to attract new employees, because the new generation of employees, they want to have a purpose, and they will have a purpose over a company which is committed to, be it E, S, or G goals. And that's for the employees, but the clients as well. So their clients as well will have to look further and dig further into the ESG commitments of the companies.
But transition has a kind of speed, also a time framework. I mean, our bank is operating in 6 European countries as well. I can give you a concrete example. A successful case, we work with one company in Poland is a coal mining company. It's like a power company. I mean, they made it really clear. It's not a very big company. They have like hundreds of employees. So they did a kind of education program for their employees on hydrogen. And they transit themselves from the traditional power industry to hydrogen industries. And they do have this kind of capacity building within the 2024 to 2030 to reach 24 megawatts. But this is a good example. We have a bad example as well. I mean, talking about standard globally, we do have a client from Asia as well. They are talking about different standard. When they talk about scope 1, it's not the same like we talk about scope 1. Don't want to add an American either, because they have a different, I mean, how many states there are? California is one, and the other one is the rest of the world, and don't talk about Texas either. So the things is being complicated. We don't have one-fit-all solutions. And we have to give the time to let the bullet or whatever try to fly a little bit further to reach the conclusions.
Okay, that's very interesting, because then we might fall in having like different transition frameworks, even within the EU, if I do understand you correctly, because we have different countries with various levels of maturity with regards to the transition. So it might be very interesting to see how it will clearly evolve from a regulatory perspective. But I would say internally within the financial institutions, waves of financing the transition. That will be interesting to see what will come as future next steps, I would say. Maybe because we are like getting closer to the conclusion, would you have like any, I would say, tips, recommendations, or insights you would like to share with any financial institutions or even like service providers who would like to further support the transition? Anyone?
Oh, wow. You know, I would definitely capitalize on the good examples and on trying to capture the data and crystallize information in a different, more creative way. What I meant at the beginning of what I said at the beginning of the panel, I really mean it. I'm actually quite welcoming this sort of like age of reason, even from the supervisors, the regulators. So I would get that opportunity, even internally, to look at just slightly less stuck-up ways to do things, collecting data, you know, raising awareness, using the different tools that exist, you know, starting a charity, I don't know, but there are many different ways to get to the same goal. So I would just use this age of reason to just broaden the set of tools that we can use as a bank to support the transition and our clients, obviously.
I still need some time to think.
Me too. So, maybe some questions.
Thank you very much. Maybe we might have like questions from the audience as well.
So yeah, thank you, Alexandra, Jackie, Marco, Julien, and ABBL. So is anyone willing to?
Thank you very much for the discussion. I'm Charles. I'm coming from Cameroon. So I see that in few years, this regulation will be applied to many companies in Cameroon or Central Africa, for example. Are you preparing them for the non-financial reporting, for example? Because at one point, it will be in your EBITDA, for example. If your clients are not compliant with the regulation in Cameroon, will be applied to you. So what are you doing today, even you in each of your bank? I'm sure that you have many clients that are operating in Africa, in Central Africa in particular, yes.
Sir, thank you so much for your question. We unfortunately do not have a client from Cameroon, but we do have a client from Africa. And to be very transparent with you, at the moment, we don't have a called solution, but we do recognize there is an issue, right? But our approach is that we try to engage our client, explain why we are asking this additional information and what is the advantage for you as an international organization to comply with European regulation. Because I guess now there's I think the feminist conference with Global South, and about this climate, it's the fact. I mean, nobody can ignore it. And the engagement is important. Maybe the first time when we call them, they will hang up the phone. What are you talking about? We'll try the second time, the third time, the fourth time, until the message gets through, or until we met the right person to renegotiate the discussion, because it's important. You have to show to our regulator we have this kind of engagement. It's important for our bank, at least.
Yeah.
You was talking about business opportunity earlier. So do you need somebody to translate?
Maybe I
help
can add something. At least on our side, I can probably add something here. On our side, I can already share that we have met several representatives of African financial centers to talk about sustainable finance and how they could develop their own sustainable finance center, how they could support local actors in moving towards more, I would say, sustainable economic activities. So this is something we are really doing as an association. And I guess also when we were working for the stock exchange, we also met several times with representatives of stock exchanges in Africa to again kind of promote sustainable finance in that space. So at least there is like really interactions or closer cooperation. Now it's more at the highest level. I would say on the ground, I would probably let the banks talk about it.
Okay.
But we got the core.
Thank you to everyone and to ABBL for hosting the session. So now I think it's time for a coffee break to recharge our batteries. Our next session will start at 4:30, hosted by Fidelity International. So I would like to kindly ask you to come back on time. Thank you.